Welcome to Good Money Guide TV. We're here with Ryan O'Doherty from CMC Markets. We're just going to have a quick chat about the difference between spread betting and CFD trading. That's contract for difference trading, two forms of margin trading. So Ryan, welcome. Thank you for joining us again.
Yeah, thanks for having me.
Spread betting and CFD trading, two products that CMC Markets offers. What's the difference?
Yeah, it's a good question because when I first came to the UK, this concept of spread betting was quite novel to me, and because spread betting is only available here in the UK and Ireland, and it's very much set up as a tax efficient way of trading the financial markets. So, because you're placing a number of pounds per point bet on a particular trade, there's no capital gains tax associated with spread betting. There's no stamp duty associated with trading spread betting, and so that's one of the major benefits of a spread bet account. Globally, though, CFDs is the product. So outside of the UK and Ireland, CFDs is the product. The major difference, they both offer margin trading. They both profit from rising and falling markets. But with spread betting, your trade size is that pound per point, where with CFDs you're trading in number of units. So especially if you've been coming across from physical share trading or FX trading elsewhere, CFD trading feels a little bit more natural because you're betting or you're trading in a number of units, where spread betting you've got to grab the concept of this pounds per point. Sure. But after a while, actually, I find that spread betting is an easier product to use.
I'll be honest with you, I find spread betting a little bit easier for risk management purposes rather than CFDs. I find, I know that's £10 per point on the FTSE, and I know that if I want to lose £100 or make £100, that's.
I totally agree. I think for new traders, they'll come on and they may not get the concept, but if they just spend a little bit of time learning the spread betting platform and how it works, I think over time they'll find that a lot easier to deal with. As you rightly said, if the market moves 100 points, I've got £1 per point. There's £100. It's quite a simple concept. Sure. The other area is that CFDs is traded in the currency of the particular product. So unlike spread betting, where everything is pounds per point, you don't have to worry about currency conversions. With CFDs, when you're trading a US market or a European market, it's traded in euros or US dollars. And so once you close that position, it's got to then convert back into your account currency. So those are probably the two biggest differences. Because for Irish customers, can you trade spread betting in euros per point? Yes,
you denominate your account in?
You denominate it in euros per point. So they're the only two. So you've got the euros per point for Ireland and then pounds per point for the
And there's really no point in having any other currencies because nobody else can do it because you don't get the tax benefits. Right. But whereas with CFD trading, your P&L is in the underlying asset currency. So if you're trading a dollar-denominated index, for example, your P&L's in dollars.
It is.
And if you've got a sterling account with CMC, what happens to those dollars?
So basically what we do on the platform is that your actual P&L is always displayed in your account currency. So even though your profit and loss is being calculated based on the currency of that particular product, we'll automatically be converting it into pounds, so we display that on the platform. So once you close out the trade, it'll always be in pounds, so your account has always only just got pounds in it. Yeah. But you can get accounts where you have denominated currencies.
I was going to ask, so for example, in arbitrage trading, if you want to be market neutral overall, but you think the FTSE is going to go up, but the Dow's going to go down, so you buy the FTSE where your P&L will be in sterling, and you sell the Dow where your P&L will be in dollars. You've obviously got a currency exposure. So obviously with spread betting, it's in pounds, so it's not really an issue. But with CFD trading, can you have different sub-accounts in different
There are accounts that allow you to do that. So you can actually have a sub-account, for example, and just have one in US dollars and one in pounds. What we find is that a lot of clients prefer just having it in the £1 and it just automatically does it for you because it's a lot simpler for them. But there are opportunities to have that multi-denominated account.
And in terms of costs involved in the two types of trading, just talk us through the way commissions work in spread betting and CFDs, and the way financing the leverage positions works.
So financing is very similar between spread bet and CFD. So if you hold the position overnight, past 10 p.m, then you charged a holding cost. Because you are trading on margin, you're effectively borrowing the funds to take out the position. So if you hold it past that 10 o'clock, you'll get charged a holding cost, both on CFD and spread bet.
And is that for long and short positions? Because obviously the financing cost is LIBOR wider.
Plus or minus.
Plus or minus, but obviously
some description, yeah.
With interest rates so low at the moment, do you actually receive interest on short positions, or is that?
It all depends on the product you're trading. So if for FX pairs, for example, or commodities potentially, you might have a differential between the two. So if pounds or the UK economy is offering an interest rate of 0.5 or 0.75%, and then you're trading in a currency that's got 4 or 5%, there may be an opportunity where you might receive funds rather than being charged. But generally, there's a holding cost.
And how do commissions work?
Yeah, so commissions is a really good one to bring up, because with spread betting, you don't get charged commission. But effectively what happens is that commission cost is built into the spread. So when you're trading equities, you'll have a slightly wider spread than what you would see, let's say, in the underlying market to factor in the commission cost. Where with CFDs, it's purely based as a commission cost when you go in and a commission cost when you go out. Yeah. There are a lot of companies that actually go out there and talk about this zero commission, with zero commission. Be careful because there is that element of making sure
nothing's free.
Nothing's free.
No free
Exactly.
lunches.
It's like going and getting your money changed at an FX bureau when you're travelling. Yeah. They say no commission, but then the spread is massive. So the same thing should apply to FX trading as well, or is really be wary, and equity trading is really be wary what the spread is, because either if it's zero commission, has it been built into the spread, etc.
Yeah. And actually, to be fair, that's always been one of the attractions to me of spread vetting versus, DMA, CFD trading where you get charged a commission on top of it. With spread vetting, it was always a nice clean price. So you pop your entry price into a spreadsheet, and then that's it.
Yeah, you don't have to worry about that commission side of thing going on at the same time. But so the other part of the great thing about spread betting as well is that you can trade in smaller amounts. So traditionally on CFD trading, there'll be a minimum commission cost placed on a trade. So that might be £9 or £10 on a particular trade. Whereas spread betting, because it's built into the spread, you could trade minimal or fractional amount and get exposure without having that minimum commission cost.
And obviously with both spread betting and CFDs, if you're trading equities, you're trading with yourself, so you're trading with CMC Markets, you don't own the underlying.
Yeah, that's right, you don't own the underlying. So both CFD and spread bet are the same in that method. So you don't get any of the voting rights and things that go with holding an equity as you would with a physical share trading. Dividends will still affect the price, so your price is adjusted basically for that dividend. So
So if you're long, you receive
so
you receive a credit, or
so the price of the value. So your position is adjusted based on whether or not the dividend and what the value of that dividend is. So you're not losing out by not having it owning the underlying. The price is adjusted to factor that in for you.
We have to be mindful as well. If you can't just go and short the stock ahead of a dividend.
Because of course the price will generally fall by the value of the dividend in some way, shape or form, or it will be affected. So
it'll be worked into the price. Okay. And generally at CMC Markets, do you see a big difference in the asset classes that are traded via spread betting or CFD? Do you find that a lot of CFD traders trade foreign exchange, where the spread bettors trade equities? Is there a big difference?
Not a huge difference. I mean, the two big markets, indices and FX, make up a huge portion of trading, both in the CFD and the spread bet market. You might get more traders on the CFD with the equities, but again, it's very similar mindset in regards to both of the accounts, because they do operate very pretty much the same in many respects. So the types of traders that get in there, some people might just not like the concept of betting or spread betting, so they'll go with a CFD account rather than. But majority of the accounts set up in the UK are spread betting accounts, and then rest of the world obviously CFD.
Okay, right, Ryan. Thank you very much.
No problem.
Nice brief chat.
Yeah, it's been a pleasure.
Thank you very much for joining us on Good Money Guide TV. We'll hopefully be back soon with some other things to talk about. Thank you.